Inflation 101. How it silently affects your life. Welcome to our video on inflation. In this educational video, we will explore the concept of inflation and how it silently affects various aspects of your life. We will break down the causes and consequences of inflation and help you understand its impact on your daily expenses, savings, and future planning. Join us to unravel the mysteries of inflation and take control of your financial well-being. We are thrilled to have you to our channel. Today, we are going to dive deep into the often overlooked topic of inflation. You might have heard about it, but do you know how it silently affects your life? In this video, we will shed light on this crucial economic concept, explain its causes and consequences, and highlight how it affects your daily expenses and future planning. So, let's get started and explore Inflation 101. Inflation is an essential economic indicator that influences the purchasing power of money over time. It refers to the general increase in the price level of goods and services in an economy. When inflation occurs, the value of money diminishes, while the cost of goods and services rises. But how does this impact your everyday life? Let's uncover the hidden ways inflation silently affects you. Understanding inflation. Inflation refers to the sustained increase in the general price level of goods and services within an economy over a specific period. It is measured as an annual percentage rate and signifies the erosion of purchasing power, where the same amount of money buys fewer goods or services. Inflation is a natural occurrence in most economies and is influenced by various factors, including changes in demand and supply dynamics, monetary policies, production costs, and global economic conditions. Understanding inflation is essential as it directly impacts consumers, businesses, and policymakers, and plays a crucial role in shaping economic decisions. Causes of inflation. Inflation can have various causes, but one common factor is the imbalance between the supply and demand of goods and services in an economy. When demand outpaces supply, prices tend to rise. From changes in production costs to fluctuations in exchange rates, several factors contribute to the rise in prices. 2. Inflation can stem from various causes, with demand pull and cost push inflation being the two primary drivers. 1. Demand pull inflation. This occurs when demand for goods and services increases faster than their supply, causing prices to rise. 1. Demand pull inflation occurs when aggregate demand for goods and services exceeds supply, leading to upward pressure on prices. 1. This can happen due to increased consumer spending, government expenditure, or investment. 2. Cost push inflation. On the other hand, cost push inflation arises from rising production costs, such as higher wages or increased prices of raw materials, which companies pass on to consumers, resulting in higher prices. 3. Monetary inflation. Other factors, such as monetary policies, exchange rate fluctuations, and supply chain disruptions, can also contribute to inflationary pressures. 3. An increase in the money supply by the central bank can lead to inflation as more money chases the same amount of goods and services. Consequences of inflation. For individuals, higher inflation erodes purchasing power, reducing the value of savings and fixed income investments. Inflation can have significant consequences on an economy, businesses, and households. The consequences of inflation can be far-reaching and impact various aspects of your life. Some key consequences include: 1. Encourage spending. Moderate inflation can encourage spending and investment as consumers and investors anticipate future price increases. However, when inflation rates become too high or unpredictable, it can lead to several negative effects. 1. Reduced purchasing power. As the cost of goods and services increases, the value of your money decreases. 1. This means you can buy less with the same amount of money over time. 2. Eroded savings. Inflation erodes the purchasing power of your savings, especially if the interest rate earned is lower than the inflation rate. 3. Uncertainty for businesses. Inflation can lead to uncertainty for businesses, making it harder for them to plan for the future and negatively impacting economic growth. 3. Businesses may face increased costs, reduced profitability, and uncertainty in planning future investments. 3. Moreover, inflation can impact borrowing costs, influencing interest rates set by central banks to maintain price stability. Impact on daily life. So, how does inflation impact your daily life? Let's take a closer look. Impact on daily expenses. Inflation directly affects the cost of living and daily expenses for individuals and households. As the general price level rises, consumers may experience an increase in the prices of essential goods and services, such as food, housing, healthcare, and transportation. This means that the same budget buys fewer goods and services over time, making it challenging to maintain the same standard of living. Moreover, inflation can lead to wage stagnation, wherein wages fail to keep pace with rising prices, further straining household budgets. Inflation affects the prices of goods and services, directly impacting your daily expenses. From groceries and transportation to housing and healthcare, the prices you pay steadily increase over time. This means you might need to adjust your budget and spend more money on the same items you used to buy for less. Planning for inflation. Given that inflation is a constant economic phenomenon, planning for its impact is essential for individuals and businesses. Investors can hedge against inflation by diversifying their portfolios to include assets like real estate, commodities, and inflation-indexed bonds, which tend to retain value during inflationary periods. Savers can explore investment options that offer returns exceeding inflation rates to preserve the purchasing power of their money. Diversify income streams. Generating income from multiple sources can provide a buffer against the erosion of purchasing power caused by inflation. Reviewing savings and retirement plans. Regularly review and adjust your savings and retirement plans to ensure they are keeping up with inflation. For businesses, incorporating inflationary adjustments in pricing and cost structures can help mitigate the impact on profitability. Additionally, policymakers implement monetary and fiscal policies to manage inflation and maintain price stability within an economy, aiming for sustainable economic growth and stability. Inflation silently impacts our lives in numerous ways. From reducing our purchasing power to affecting our daily expenses, it is essential to understand the dynamics of inflation and plan accordingly. By staying informed and taking proactive steps, we can mitigate the effects of inflation and secure our financial future. Thank you for watching our video on inflation. We hope this crash course in inflation has shed light on its significance and how it affects your life. Remember to stay informed, plan for inflation, and make smart financial decisions. Don't let inflation silently deplete your financial well-being. Stay tuned for more informative videos to empower you on your financial journey.